Hi guys and welcome to my YouTube channel. My name is Zwannda, and in this channel we talk about all things personal finance, exploring all the financial investment vehicles that are out there, making sure that we rightfully use them towards our goals. If you feel like that's something that you want to do that resonates with you, please subscribe. Okay. So yeah, press the subscribe button, comment, and also like. Okay, as you can see today I'm not by myself. I am with our special guest Furupero. To be honest guys, I've been asking this girl to be on this channel and last year yes, and she's finally here. I'm excited about it. And we have amazing conversations to talk about, right? If you remember, on one of my videos in the beginning of the year, I said one of the areas that I want us to grow together on is tax and insurance. And Furu today will be talking to us about insurance, right?
Yes.
Furu, before I continue, can you just quickly introduce yourself and tell my viewers who you are and what you do?
Okay, thank you for actually inviting me. I'm finally here because this has been long coming. But on the point that I was the one being dizzy about coming to your channel, I feel like we were both just dizzy about doing this collaboration, by the way.
Yes.
So I'm taking the shot for the team just for today.
Thank you.
Wow.
I will let you take it.
Wow. But anyways, I am Fuluperani Mashapa.
Oh yes.
And I almost say if you're new to this channel. That's my intro. I'm a YouTuber as well. I do YouTube content on risk, money, and insurance. I am an aspiring actuary. I haven't qualified as an actuary yet, but on my way to qualifying. And also, I just love reading. I love poetry. I love arts overall. And what else? My life motto is the learning never ends. And I constantly challenge myself to learn new things, learn about people, and hence I'm here today. So let's get into it.
Nice.
Yeah.
Oh, quickly, just tell us what it means to be a qualified actuary.
Oh, nice. So, guys, there are people that I'm thinking of a meme right now where someone was saying actuaries are people who are trying to solve a problem that you don't know you actually have.
Wow.
And essentially somehow it's funny, but like it's essentially what we try to do. So we are in the business of identifying risk and actually finding ways to mitigate the risk and like sort of measure the risk. So as a qualified actuary, that means you have the certificate to actually say, well, I have all the right, expertise to tell you that this is the level of risk that you're taking. And I can now sign off on numbers. Yeah. So essentially, you're in that position where you've written all your exams. If you're in South Africa and you've enrolled with the Actuarial Society of South Africa, they recognize you as an actuary. So there are different members, like there's TASA, there's AMASA, and then FASA, which is like the fellow. That's like the end goal. That's where we all want to be. Yeah.
Yes.
So essentially,
well, I still do not get how insurance comes in, right? Like, where does insurance comes into all of this?
Okay, so I did say like we deal with risk, right?
Yes.
So insurance now is protection against the risk.
Yes.
So we did tell you that we identify problems that you didn't know you have. So risk is like one of that. To say you as an individual, if you have a house, you are faced with the risk that someone can bend down your house, or like an appliance in your house can actually bend down the whole house, or like maybe someone is driving recklessly and then they somehow drive through the walls and everything and then get inside. So like a lot of things can happen, or like it can be natural disasters, so like floods or like earthquakes destroying your house. So we try now to say, well, you have a house And we know for sure that you cannot, if something were to happen to your house, you cannot replace, or like rebuild your house. You don't have that kind of money to do it in a day. Yeah. So we come in and say, we can quantify this risk and charge you a premium, right? So like charge you a certain fee for you to get insurance. So what we're saying is you give us the money, and in case something happens to your house or whatever you own or whatever you've insured, we will then pay out. And this is how much we will pay out.
That's more clearer. I love it.
So that's essentially what we're doing.
It's so nice, and it goes to the question that I wanted to ask you, right?
Yeah,
is that Black people in general don't understand insurance. It's sad, but it's true, right? I think we just do it because maybe the bank said, if you don't buy insurance with this house, we not
funding.
Yes, exactly. So what is insurance in simple terms to someone who really
doesn't know? I feel like insurance is an umbrella for a rainy day.
Yes,
that's what it is essentially. So the main idea is, if it's raining, you know that you have an umbrella, so you're covered.
Yes,
right.
Yes,
but if it's not raining, you're still covered in a sense, because it's not raining, so you don't need the umbrella.
Yeah.
But like, you do know that if it starts raining, I have an umbrella. So if I die today, I have umbrellas that will then provide for my family, even though I'm no longer around to do so. If I have kids, then I know that my kids are covered because, I left umbrellas for them.
Yes.
So if I'm sick today, I have an umbrella to protect me against, all the medical bills and everything that I need to actually pay for.
Which can be expensive.
Which can be really expensive. Like one day can just mess up your whole financial, stability. So it's like an umbrella, honestly. Just think of it as an umbrella for a rainy day.
I love that analogy. I love it because then, you understand that, okay, I'm not just paying this premium.
Yes.
It's in case of a rainy day, right?
Yes.
It's in case of a rainy day.
Rainy days. And also how we define, I think where the conflict comes in is how we define a rainy day and how an insurer defines a rainy day can be slightly different.
Elaborate.
So you might think you are covered for certain things, and I think this just generally goes back to understanding the product that you're getting when you get it. Instead of, we know like people push sales and they'll be forcing you to say, oh, you need this cover, whatever. And I don't know, maybe out of annoyance or whatever, you actually end up saying, well, just sign me up. It's fine, I'll take it. At least you will like leave me alone after that. And you get into a situation where in your mind you think you have a certain kind of umbrella that is not exactly the kind of umbrella you bought. So understanding what you're covered for and what you're not covered for, that becomes really important. For example, imagine a situation where someone commits suicide, right? And under the terms and condition of the umbrella you bought, they specifically said death by suicide is excluded.
Yes.
So now, my family wouldn't understand, like, why aren't you paying out? We've been paying premiums for years. But it's like, it's not the right kind of umbrella. Thank
you for that. It's very important to understand the content within the insurance.
Yes.
Two main insurance types that I hear people talking about, or that maybe a lot of people are exposed to, is one, the car insurance.
Yes,
two,
definitely.
the
shout out to all the BMW drivers. If you're driving a BMW, can you please get your insurance? Because I've had so many stories about BMW drivers and not having car insurance. If you're driving a BMW, please. And they own the road. Maybe there's a little rant.
Yes. It's true though.
Yeah.
I had a friend, it's not a BMW, this is a Polo story.
Yeah.
I had a friend who somehow felt like insurance was too expensive, and then
it is expensive if we're being
stopped.
Honest.
Yeah, but the cost of not having insurance is even more expensive. Exactly.
Yeah.
So he cancelled insurance, enjoyed his extra whatever that he was getting from not paying insurance, and he got into an accident and his car was written off and he continued to pay for it. So insurance is important, guys.
That is the worst case scenario. Or you actually have your car insurance but you didn't include the gap cover. So for in case you've driven your car for so long and you've covered your car, let's say under market value, right?
Yes.
And so the value of your car as you drive it depreciates. So you get to a point where even if they were to say, okay, what is the market value of your car versus what you're still owing the bank, there is that shortfall. That one is still on you. And like, if your car is written off, you're screwed. So
For someone who doesn't know, what is a gap cover?
So a gap cover is essentially like there to protect you if you buy your car and you finance your car through a bank, right?
Yes.
Car financing. So what then happens is there is a time in the time value of your car where the value of your car, right, the market value of your car is actually less than what you still owe the bank. Because I mean your debt with the bank is increasing with interest rate, but the value of your car is actually depreciating the more you like using your car. And like from the minute you drive your car out of the dealership, it loses around 12 to 20% of the value. So it's like by the time it's like a year into, you know, driving and like 2 years in, somehow the value is actually like depreciating every single day. So now you get in an accident, they write the car off. The insurance is like, okay, we covered you for the market value of your car, which is 250, but like you still owe the bank 350 rand.
Yeah.
So it's like 350,000, guys, not just thousand. So yeah, with the K. So there's a difference of like 100K that's still sitting there. That's like in essence not covered.
Yes.
So then you need a shortfall cover for that to say, should I get involved in an accident and my car is written off and I still owe the bank more than what my car is worth, then the insurance should actually, you know, pay for the difference. So that when you're walking away knowing that my insurance is actually covered, you know, whatever that I was owing. And if I am to take out another car on financing, then I'm starting like on a clean slate and not taking over something that I had or like still paying for something that I don't have anymore.
That's nice. Is there an alternative to cover 100% instead of topping it up with a gap cover? I mean, looking at it myself, I'm like, why do I have to get a gap cover? What are the different options that they can offer you? Yes.
Okay, the shortfall came about because there's no like 100% type of cover. Even if you do say I'm covering, so there are two ways, right, where you can sort of cover your car. You can do market value, where like, okay, the value will go down as you driving your car. And then there's retail value, where it's like, okay, if we were to buy a new car to replace your car with the similar circumstances and everything, how much would the dealership actually say this car is worth? And that value is actually way higher than your market value. It's always higher. Your retail value will always be higher than the market value because the market value is like, I'm taking your car, we're going to the market, and like, how much is someone willing to pay for this car?
Yes.
And so someone can come and say, just 100K, guys. Things old. So normally, to be safe, you can insure your car under like your retail value. And I think even with people that I've spoken to when I was shopping around for my car, they always advise, you know, insure your car under retail value because that's always higher than the market value.
Okay.
But people will then choose market value to save on insurance. Premium. But if you do that, make sure that you also get a gap cover for in case.
That makes sense. How long can one have a gap cover for? I know that there's a time where maybe there's a break even.
A break even point. Yeah.
So how do I know that this is time where I can just pull out
your gap cover,
and then I know that
it's a break even.
I don't need my gap cover.
That question is actually like a component of different factors, right?
Okay.
Because then now we're looking at how much did you borrow? And at what percentage, and with different cars, right? So if we compare like a Suzuki and a Polo, they don't depreciate on the same rate. So normally if you want to know where your break-even point will be, because insurers won't tell you like, oh, your break-even point will be at this point, so like you only need it to this point. But like when you buy your car, or like when you're still talking with your dealership, you can actually ask them like, okay, when is the break-even point? So that even when you go now to an insurer to say, well, I'm negotiating insurance and whatnot, actually I just need a gap cover for this period and not the whole thing, because you already know. Yeah, so you need to ask your dealership, because now it will vary depending on your what car you've actually bought. But for Polos, I know they say like after 2 or 3 years, you reach that point. So when you reach that point, then they advise you on the basis that you can actually trade in your car and you won't be owing anything because it's a break-even point. Which is a scam, because now it becomes, if you constantly trading in your car,
you're increasing your debt.
Yeah, exactly. You like, okay, you're doing the process and you go halfway and then you start over again.
Yes. Okay.
So there's that.
Thank you for that. People complain about insurance premium all the time.
I knew this one was coming.
So then, how do I make sure that I prepare myself enough to get a better premium for insurance?
For insurance.
Yes.
Okay, the one thing that you can do, which I feel like it's still within your control, get your license as early as possible. Like, get it as early as, like, 16 vibes, write your learners, you know, they like get it as early as possible. And also just like, if you know you're driving a car at home, say your mom's car, for example, let her put your name there, not like as the main member, but like as one of the drivers right there, right? To say now, when you go buy your own insurance, you've had your license for long, you were also under a certain policy. So there's like, if you're a good driver, because now it becomes, are you a bad driver or a good driver? If you're a good driver, then you sort of have, it's like a credit score in a sense, but for insurance, we kind of know what kind of a driver you are. So we feel more comfortable when we have more data on you as a person. So now if we know you've actually had your license for 6 years, you've been driving, you were listed as one of the drivers in your mom's car for like 3 years or so, you've never claimed, or like you've claimed only once in the last 10 years, then like that gives them a profile to say, well, this is a relatively good driver. And also, if you're buying like a second-hand car, the value is lower, so like your insurance is likely to be low as well. And like a brand new car where the value is like up there and like you need to pay more. And also just like driving overall, shopping around, I think also helps. But it doesn't help if you don't have an older license and like
the basics right.
They will just chow you with the premium because they're like, we don't even know you got your license last year. We don't even know if you passed or like you passed backdoor pass, so we're not sure. So those are some of the things you can do.
Sometimes insurers will come to you and say, well, I'm decreasing your premium, right?
Oh, yes.
And then obviously the catch is with the excess. I don't know if I'm pronouncing it right. The excess, right? So then what is an excess? How does it work for someone who doesn't know? And should I take it or should I not?
So in essence, with an excess, it's like if you are to claim, right? Let's say 10,000 and you have an excess of 5,000. What the insurance company is essentially saying to you is the first 5,000 of the 10,000 that you claimed, you pay that yourself. The remaining amount, yes, we will cover that. So that's how it works. And normally it's done to sort of control, you know, like if you know that if I get into an accident, the insurer is going to pay and I won't have to feel any pain. So it's like a way of them controlling you to try like make you be a good driver in a sense. And like a partner, you're partnering with them. And also we don't want a situation where with every single thing, like let's say you scratch your car and it's going to cost you like 900, you're going to be claiming for that with anything else. This is like, okay, for all the claims that are less than, 5,000 rands, cover those yourself. So that's how it works. And normally it brings down your premium because then they know like, okay, we have a common interest here. Because if something happens and you claim, we are both paying. It's not one party paying. So essentially that's how they do it. And also for young people, most of the time, if you're getting an insurance without an excess, which I feel like these days is very common, it's actually way expensive. I did a quote with Discovery and they were telling me, no excess, nothing, everything. My insurance came to somewhere around 3,000. I was like, this is madness. I was like, no, this is madness. I won't. Exactly, like 3,000 rands for what? For insurance? I know I'm a good driver. And like there's a grace of God somewhere there. Even though my driving is bad, but like, no, surely. Like 3K every month, that was insane. And like my excess was like 5,000 rands. And I was like, well, listen, I have that 5,000 in my emergency fund. I don't need this. Because in essence, we're pricing for that 5,000 in the premium now.
That's good. Thank you for that. Also, another question. This one I know I'm asking for everyone. I've had people crying about claim rejections, right? Like
one of those.
And I think it's the worst that can happen to anybody, right?
It is.
What are the things that you need to look out for so that you don't find yourself in that situation?
I think bottom line, right, it goes back to understanding the policy that you're given, because that policy is a contract between you and the insurer. And it's essentially there to protect both of you and to also set expectations as well. ideally, in an ideal world, you need to get as a customer, right, buying insurance.
Yeah.
You need to get all the explanations, right, of what's covered, what you're really buying. What tends to happen is some of us, we just want insurance.
Yes.
We're not listening at that point in time, right? And they'll even advise you like, oh, go read the terms and conditions and whatever. But like, you get that policy document is like 5 pages, 6 pages. You're like, yo, this language is like law even.
Yeah.
And we're like, as long as I know I have insurance, right? But then it goes back to, but do you understand the kind of umbrella you have? So now you into a situation where you're claiming for something that they explicitly said in the terms and condition that it's not covered.
Okay, I see.
Like, for example, when I was trying to shop around for my car insurance, because like I am on the move, I'm like, listen, if you're going to be here threatening with premium increases, I'm diving in the market now. I'm trying to get the best rate out there. Then they came up with a deal. It was really good. And then I was like, no, this sounds too good to be true. Because for someone under 25, I've had my driver's license from like 2017. I'm like, well, I wasn't even listed in anyone else's insurance. So they pretty much don't know what kind of a driver I am. This is too good to be true. So now I drill deep, right? And I'm like, but what is not covered?
Yeah.
And they were like, oh, so essentially what is not covered is if anyone else is driving your car and it's not you, then if they get into an accident, we won't pay. I'm like, how? And you didn't see the need to explain that to me at that point in time. And then they're like, oh yeah, another thing, we're covering you under market value and not retail value. So like, because they know we're looking for lower premiums, they will try on their side to try, remove some of the benefits. And I'm like, okay, what about shortfall cover? They're like, no, it's not there, that's separate. And I'm like, oh, okay, what about scratches and dents? They're like, oh no, that's not there as well. This is like just a basic structure. I'm like, no, I don't want a basic structure. I want a comprehensive kind of insurance where you cover everything and I know I'm sorted. So then now, if I had just chased a lower premium without really looking at what is covered and what is not, someone else, my sister drives my car sometimes. So she takes my car, gets into an accident, and then they're like,
no insurance.
No. We said, you're not covered. So that's important. Understanding what you've bought and what is excluded. I always ask with insurance, what is excluded? Because that's the important thing. That's where you and the insurer will start fighting. In your mind, you're thinking, no, it's obvious. They've covered 1, 2, 3. And they're like, no, fam, go to policy, your policy documents, look at section 4 and subsection 4.2. You'll see that it's not there, and that's devastating because you really need that umbrella in that point in time.
Okay. One last question from my side.
Yes, you were grilling me all along. I'm here representing all the actuaries. I'm like, yo, our profession is shaking.
It's all for the knowledge, right?
Yes.
A lot of people have gotten burned, so we just try not to get burned.
No, that's true. That's true.
So with house insurance, I think this one is not as famous or as well known as the car insurance. Like,
true.
What are the type of insurances that are out there with a complex kind of a setup and also with a standalone kind of a house?
So for a complex one, right? Normally on a monthly basis, you pay levies, right? So what a portion of the levies actually goes to ensuring the structure, right? So the whole complex. If you're renting, then your landlord is essentially paying as part of the levies for that insurance. To just say the structure, like if anything were to happen, floods, fire, name it, any damage to the structure itself, right, is covered. But then the contents inside are not. So then you can either get then just say, well, I'm going to buy the contents insurance, which I was shopping for a few weeks ago, to say, oh, check out my YouTube. Check out my...
You almost missed that one.
That was an opportunity, guys. Please check out my YouTube video on house contents insurance. So then you're covering everything that's inside, right? And even with the house and contents insurance, of course, it's like anything that can happen, like theft, fire, any damage like floods, and these days they do have an additional cover for like if things in your house are damaged because of ESCOM and load shedding. But some people are God's favorites like her, they don't get load shedding, so I'm guessing they don't need that cover. So you can add it on to say, well, if load shedding, ESCOM comes, they don't do the power things right and it bends everything in the house, then you can also claim for that. So for someone who's paying levies, then you can just add contents insurance. And if you're a tenant and you want to protect the goods and everything inside your apartment, then you can get contents insurance, because if anything were to happen to the structure, yes, they'll get insurance to rebuild the structure, but the contents inside are not protected. So just be aware of that. Then for someone who has a standalone house, I made an example using my mom. So she got like house and contents insurance combined. So now it's like you're covering the house, the structure itself, and you're also covering everything that is inside. And normally with this kind of policies, they'll normally tell you when you buy to say, if you're going to renovate or make any changes to your house, then you need to notify us. So that's also important, because now when you have insured your house and you're like, oh, this thing is like, the value of this is like 600K, you do renovations and it's worth like $1 million, but you've been paying for a house that's like 600K, then they're like, well, we're only going to give out 600K because that's what she said. So the more you renovate, the value of the house increases. So they need to now make amendments to actually say, well, we renovated and like our house is actually worth way more. And also another thing, people tend to underestimate as well the value of the house. And they're like, no, I feel like it's 2 something. But now when you have to rebuild the house, you find like,
that can't rebuild it.
That can't rebuild the full house. So it's also important to just say the cover amount. You should try to estimate like, okay, this is how much we needed when we were building this, but now if I were to do this all over again now, how much do
it cost?
So when it comes to house and contents, for people who are standalone, they need to just grab both, because no one is there to make that one for you.
Okay, thank you so much, Fudu, for coming to my YouTube channel. I really, really appreciate it. I hope that you guys learned a lot on this, because I did on insurance. And also don't forget to subscribe to our channel, right?
I'm keeping up, so you guys must keep up with her as well.
Thank you so much.
Thank you. Bye.
Don't forget to like, comment, share, and subscribe.
It's done in the beginning.
Sorry.
Don't forget to like, comment, share, and subscribe to my channel. Subscribe to my channel. Thank you guys. Bye.